Let's drill down on energy. It was the best performing sector this week, gained 10%, but the Chartmaster says the energy rally may be running out of juice. So let's get to Cornerstone Macro's Carter Worth. Carter, take it away.
Well, just what you heard. I mean, there's a reason that a great trader would enter and then exit. Twice, Pete made the case that if he really wanted to stay for a long duration, he would have stayed. But the point is, sometimes things get a little hot and it's right to harvest gains. The energy move is a little hot. In fact, before we look at the charts, consider this. February 4th, 5th, 1 month ago, energy was the exact same price it was at its '09 low. I mean, 10 plus years as a donut, nothing. And we've come to life in a big way, but we're so far off the low. Best performing sector since the March low now, a year ago, up 120%. It's a little steep. I think you fade it. So take a look at 4 charts, and they're all the same chart, just different time frame. So here is XLE, the ETF that captures the sector. No annotations or judgments by me. Second chart. Now I've drawn a line. It's a simple exercise of figuring out where overhead supply comes into play, where people who have shares from a higher up level, having lost a lot of money but retained it, are interested in recouping losses. You're back to that line. Now look at the same chart taken back a bit further. Same line. And then the final chart, taken back all the way to 2010. After breaking sharply from well-defined lows, and one of the most epic breaks on record, you rally all the way back to, quote, the scene of the crime, the point where people who have now had their money returned to them become interested sellers. And remember, that's only half the supply. Supply from above, wow, I got my money back, I've broken even. But there's supply from below, people who bought well 1 hour ago or 1, 2, 3, 4 months ago. Huge gains. They think they might book it, just as we heard that Pete might exit a trade having made some money.
Yeah, XLE is mostly the integrated, Carter. So is there a differentiation in your view between the chart of the XLE versus the chart of, say, XOP or some other energy index?
They all have their different characteristics, XOP being a sort of higher beta, obviously Schlumberger and Halliburton in the OIH. And we do know Exxon and Chevron have to weigh the entire sector. And the entire sector is only 3% of the S&P. It's a very in-play thing. But I'd end with this. Amazon, Apple, Google, they were loved. Now they're hated. Financials were hated. Now they're loved. This is a little too loved right now.
Okay. Carter, thank you. Carter Worth, we'll see you in a few minutes on options action. Jeff Mills, where do you stand on energy?
Yeah, I mean, I can absolutely understand what Carter's saying, and that 60 on the XLE is going to be resistance most likely, but at the same time, that's 13% above where we are right now. So I think you have a reasonably clear path there. And if you're taking a little bit of a longer view, and maybe you want to talk about specific names, I mean, I've mentioned EOG a number of times on the show. You know, it's up 50% this year. That's a big move. So perhaps people are going to take profits, but that's still half of where it was at the 2018 highs. So I think there is an opportunity for multiples to re-rate a little bit. You had OPEC decide it was not going to increase supply. It doesn't look like they're going to do that anytime soon. So if you have a little resistance at that previous floor, I still think you can move higher.
Grasso, do you have an energy name you like?
Yes, I think I'm going to stick consistently with XLE. I think you have 20% to the upside. So, and I think you could probably get there fairly quickly. Let's remember we have A, stimulus getting done, B, no one is even talking about an infrastructure plan. Granted, that's coming. If you can get the votes for it, it's eventually going to be coming in the summer. That's going to be huge for energy. Now, think about something else. Every quantitative model that the market has seen has always sold, I'm sorry, Pete, sold value, bought technology. But I get what Pete's saying about what is really value. So just think about this. That modeling is probably going to be turned on its head. What I mean by that is that they're going to be selling technology, buying value. So everyone's going to have to scratch their head on this show when all of a sudden energy, industrials, materials, chemicals actually become momentum names, and they're going to be a much larger position than 3% of the overall indice.
That was a very nice way of saying Carter's wrong in your view.
Shepard Smith here. Thanks for watching CNBC on YouTube.